Welcome to another episode of Management Unplugged by GR. Today we're taking a deep dive into, well, a really high-stakes business dilemma. It hit a major telecommunications company, GST Inc., pretty hard, and it's all about their struggle, their journey really, to get actual value from customer relationship management, CRM.
Right. It's a fascinating case study.
So imagine this company, GST, grappling with some significant spending. Big spending, and even bigger questions about where that investment was actually, going. Our deep dive today introduces you to the key players in this whole business drama. First up, there's the cautious CFO. He's famously said he has no idea what return we are getting on the $3 million I dump into it every year. That's after seeing millions poured into CRM with, well, no clear return.
Ouch. Yeah, that's a CFO's nightmare right there.
Exactly. Then we have the VP of Marketing, very sharp, MBA from Kellogg, over 15 years in telecom. She desperately needs actionable customer data, needs it to drive growth.
She's feeling the pressure from the other side, needing results.
Totally. And finally, there's the tech visionary from Telecom, a data warehousing giant. This guy has a track record, already delivered massive ROI for GST before, and now he's proposing a bold new solution.
And this setup, it isn't just about, buying some new software. It's really a stark illustration of a strategic paradox, I think. You've got severe market contraction, financial distress. So, is the right move to retrench, cut costs, or do you make a bold, maybe transformational investment like this one?
That's the core tension, isn't it?
Absolutely. GST's decision here, it really highlights that critical point where doing nothing could be just as risky as, well, a multi-million-dollar gamble. It's a classic test of leadership under pressure.
Okay, so let's unpack that initial CRM headache first. GST had already sunk considerable sums into what they thought was a basic CRM system.
Right, the first attempt.
Yeah, and this was mainly focused on what's called operational CRM. So for you listening, that means the day-to-day tools, call centers, Salesforce automation, that kind of thing.
Stuff to just keep the wheels turning operationally.
Exactly. Sounds foundational, right? But the CFO clearly saw it as a money pit. From your experience, why do these initial CRM projects sometimes, well, fail to show that tangible ROI? Why the skepticism?
That's a great question. And it happens a lot, actually. Often, these operational CRM systems, they get put in without really clear performance metrics tied to actual business outcomes.
So they track activity but not results.
Precisely. They're great at managing interactions, logging calls, tracking leads, but not necessarily at generating insights or directly proving they increased revenue. So the CFO's frustration, totally justified. He felt performance metrics were never established, made any ROI calculation feel like pure speculation.
Can't blame him for being skeptical then.
Not at all. The tap's open, but the results, invisible.
And the VP of Marketing felt that lack of results keenly, while that operational CRM might have been somewhat useful for the sales team.
Maybe. For basic tracking.
Yeah, it just wasn't providing what marketing needed. She was looking for, the ability to identify specific target customers, to figure out how to cross-sell, upsell the really profitable offerings.
This is strategic stuff.
Right, and to truly maximize marketing ROI by analyzing customer behavior over time, for better decisions.
She needed to get beyond just tracking interactions. She needed to understand customer value, potential, the deeper picture.
Which is exactly where the tech guru from Teradata steps in.
With his counterproposal, analytical CRM.
Okay, so analytical CRM. This is presented as something really distinct, something powerful compared to the operational CRM GST already had.
It's a fundamental shift, really. Moving from just recording what customers do to deeply understanding why they do it.
So for listeners maybe familiar with traditional CRM, how does analytical CRM change the game? Is it less what happened and more why and what's next?
Exactly, you nailed it. If operational CRM logs the what? Analytical CRM uses detailed data analysis, modeling, all that good stuff to gain much deeper customer knowledge. It's about taking all that raw data, sales history, service calls, website visits, you name it, and transforming it into actionable insights. Real intelligence.
Actionable being the key word.
Absolutely. It's about understanding behavior, predicting future needs, and then precisely targeting customers with the right offers at the right time. The ultimate goal, strengthen those relationships and, crucially, boost profitability. significantly.
Now, a really critical point here, a differentiator, is how this new analytical CRM solution was supposed to leverage something GST already had.
Ah, yes, the EDW.
Their existing $32 million enterprise data warehouse, the EDW, this wasn't building from scratch. This EDW had already delivered a documented 65% ROI, saved them $27 million by consolidating data marts.
Okay, so there was a precedent for success with this kind of data infrastructure.
Exactly. And that connection is absolutely crucial to the pitch for top-line growth. It wasn't just buy our new system. It was amplify the value of the massive investment you already made.
Makes the pitch much stronger. It's building on success.
Okay, let's set the stage a bit more. The timing here is important. We're talking early 2000s, around 2001,
Right.
2002.
You're not exactly boom times for telecom.
No kidding. It was
Yeah.
a really challenging time. People often call it a telecom meltdown.
Yeah.
We saw intense competition, profit margins just plummeting.
Plummeting, is it right?
Massive industry debt. U.S. and European companies were burdened with something like $700 billion in debt.
$700 billion, that's staggering.
And projections were over $100 billion in defaults or restructurings. It was grim.
So in that environment, expansion was pretty much off the table. Consolidation was the name of the game.
Right.
There was very limited capital for new entrants. And customers, meanwhile, were demanding lower prices. Always lower prices.
Which led to pretty modest revenue growth, if any.
And declining return on equity. It fell from like 13.8% in 96 down to just 5.9% in 2000.
Wow.
So in this telecom meltdown, capital's scarce, debt is massive, but GST still needs to grow. It really forces the question, doesn't it? When market conditions are brutal, do you just focus on survival?
Hunker down.
Or do you double down on data to find those hidden opportunities your competitors might be missing?
And despite these, formidable challenges, GST had ambitious goals.
They did.
They aimed to grow their 13 million wireless accounts by 5% annually.
Which, in that market, was a big ask.
But there was a huge hurdle. Customer churn, losing customers. GST had an 18% annual customer churn rate. Now, that sounds high, maybe.
It does on the surface.
But it was actually one of the lowest in the industry back then. The
Yeah.
average was a staggering 29%.
29%. That industry average really highlights the unique challenge in telecom. It was like, trying to fill a bucket with a massive hole in it. GST's 18% actually shows they were doing something right, relatively speaking. But it still represented a huge drain on resources and growth potential.
So doing the math, to hit that 5% growth target with 18% churn.
Right. They needed to acquire roughly 23% new customers each year, just to replace the ones leaving and then add the 5% growth.
That's a massive acquisition engine they needed to fuel. Huge pressure on marketing.
Immense pressure.
So given these incredibly high stakes, Teradata proposed a very rigorous first step.
Sensible approach.
A business discovery process. This was a specific statement of work, cost $30,000. And it was designed specifically to identify GST's biggest pain points first. Then propose a tailor-made solution, crucially, complete with a detailed ROI projection.
So not just selling software, but diagnosing the problem first.
Exactly. Understand the specific problem before you prescribe the expensive cure.
Makes sense. And what did that discovery process actually uncover?
Well, it pointed to a very specific, very targeted customer acquisition campaign, focusing on parents of teenagers, specifically those aged 15 to 17.
Interesting segment.
The idea was a direct mail offer, a prepaid wireless phone package, $99 for the phone, plus 1,000 initial minutes, with ongoing prepay options, of course.
Right. So not a spray and pray approach to marketing at all. This is focused based on insights presumably gleaned during that discovery phase.
Precisely. Data-driven strategy. So let's look at the baseline numbers. GST's current acquisition campaigns. Well, they weren't exactly setting the world on fire.
Underperforming, were they?
You could say that. It cost them $5 just to contact one potential customer.
Okay, $5 per contact.
Their current success rate, the take rate, was a mere 3%. Tiny.
3%? Wow, that's low. A lot of wasted effort and money there.
And the average monthly spending by a new customer in this specific target group, parents of teens, was about $42.
$42 a month.
With a gross margin on those services of 40%. So those are the numbers they're working with before any changes.
Okay, so that's the baseline reality. Now here's where Teradata steps in with their projections, their confidence. They project a significant lift with the new analytical CRM system.
A lift.
An improvement. They believe it can improve that take rate, the success rate, by 5 percentage points.
5 percentage points. So bumping it up from that dismal 3%.
All the way up to 8%. That's more than double the current rate.
That's a huge jump. And what about spending?
Plus, they project an increase in the average customer's monthly spending by about 20%.
Okay, hold on. A 5 percentage point lift in take rate, so from 3 to 8%, and a 20% increase in spending per customer.
Yep.
Those are, well, those are bold projections, especially in that telecom meltdown environment we talked about. What made Teradata so confident they could deliver that kind of lift when competitors were probably just trying to survive?
Well, their confidence really stemmed from leveraging that existing robust EDW we mentioned earlier.
The foundation was already there.
Exactly. Combined with the precision they believed they could achieve with analytical modeling, they argued that by understanding customer segments at a much, much deeper level, they could identify individuals far more likely to respond positively, shifting from broad targeting to hyper-targeted campaigns.
Makes sense? Less waste, better results.
That's the theory. And importantly, they projected that new customer revenue could start coming in the month following the campaign launch, with initial contracts typically lasting 1 year, so the impact could potentially be felt relatively quickly.
Which is crucial in a volatile market, right?
Yeah.
Every month counts. Investors want to see quick returns.
Absolutely. Quick payback is always attractive.
Of course. All this promise, this potential lift, it comes with a hefty price tag.
Yes. The investment part. Never cheap.
Let's talk about the big investment required for this Teradata solution. Up front, at what they call time zero.
K1 costs.
We're looking at significant costs. $1.5 million for hardware,
Okay.
$2.5 million for software,
2.5 mil for software.
and another $1 million for professional consulting services, implementation, setup, training, presumably.
Right. So
Yeah.
add that up. It's $5 million right out of the gate. A big check to write.
Very big check. And as you said, that's just the beginning.
Always the ongoing costs, too.
Yep, their ongoing annual fees, those professional services, they'll cost 20% of that original $1 million fee annually, billed monthly.
Okay, so another $200K a year, ongoing.
Then hardware maintenance, that's 12% of the hardware cost, the $1.5 million annually, billed quarterly.
12% of 1.5 mil, about $180K a year.
And software maintenance tax on another 18% of the software cost, the $2.5 million, annually, also billed quarterly.
18% of 2.5 million. That's $450K per year. Significant ongoing cost.
Yeah, we're talking around $830,000 in recurring annual fees on top of the initial $5 million.
And the initial commitment for all of this, it's for 3 years, so they're locked in.
3 years. And financially, GST isn't taking this lightly at all. They're weighing it against their usual cost of capital, which is 14%.
Their WACC, yeah, weighted average cost of capital.
But for riskier projects like this, they're demanding an even higher return, 16%.
Setting a higher bar because of the uncertainty. Smart.
And that 38% tax rate also plays a big role in how the net financial benefits, the actual profit, will be calculated over time. It definitely influences the true profitability of this whole investment.
All those financial details matter hugely in the final decision.
So this brings us right to the crossroads, doesn't it? The central dilemma facing GST's management team.
The big decision point.
Should they commit? Should they make this massive investment based purely on Teradata's projections? It feels like a huge gamble.
Especially given CFO's past skepticism.
Right, and the awful state of the telecom industry at the time.
Yeah, it really raises that important question. What are the potential pitfalls here, the uncertainties?
What could go wrong?
Well, first, there are data reliability concerns, especially if they're using third-party mailing lists, for instance. As the saying goes, sophisticated analytics are worth nothing if the database employed is incorrect. Garbage in, garbage out.
True. The best model won't help if the data's bad.
Then there's just the inherent uncertainty of projections. Teradata's ROI analysis, it's clearly stated right there, non-binding estimate. It's a forecast, not a guarantee.
A very important caveat.
Plus, there's intense competition out there for those high-spending customers everyone wants. And the challenge always of picking the right time frame for your ROI analysis. Do you need quick payback, or can you wait for longer-term benefits?
Balancing short-term pressure with long-term strategy.
Always tricky.
But the potential rewards, they're incredibly compelling, you have to admit.
Oh, absolutely. The upside is huge if those projections hold true.
We're talking potentially significant revenue growth from those improvements they projected in take rate and customer spending.
Which could be a game changer.
It's an opportunity, maybe, to gain a crucial competitive edge in a really struggling industry.
To leapfrog competitors, perhaps?
And, importantly, it's a way to leverage that huge EDW investment they'd already made, to finally get its full potential, shifting the company to a genuinely customer-centric approach.
Unlocking the value of existing assets.
Plus, there were other potential benefits mentioned, right? Like maybe improved customer retention programs down the line, fraud detection, even better evaluation of network capacity needs.
Yeah, the potential ripple effects could be quite broad beyond just that initial acquisition campaign.
So what does this all mean for GST? It's a tough call. What would you do? If you were in the shoes of that skeptical CFO or that hopeful VP of marketing, do you pull the trigger on this $5 million plus investment?
It's a fascinating dilemma. This high-stakes business case faced by GST Inc. It's such a great real-world example of how data, strategy, big money decisions, how they all intertwine, especially in a challenging market. It just perfectly illustrates the complexities of modern business investment, where sometimes the cost of not knowing your customer, well, it can end up being far greater than the actual cost of acquiring that deep insight.
That's a powerful point. And as we wrap up this deep dive, maybe consider this provocative thought. In this era we live in now, with information overload, where data itself is almost overwhelming, how do you truly weigh the value of actionable insight, the stuff that actually lets you make better decisions against the very real, very tangible costs of acquiring that deep understanding of your customer?
Food for thought.
We hope this deep dive into GST Inc.'s challenge has given you, our listeners, a richer understanding of the complexities behind these big strategic technology investments. See you later. Bye-bye.